So I get questions a lot asking how to screen or look for sort of stocks. I do recommend using this filter here. So it pretty much will meet a lot of criteria that I look for. If you're trying to scan and look for stocks that might be compelling, it'll streamline a lot of the stocks for you, right? So I'm looking for, like I said, intrinsic value for stocks that are over 20, 30%, right? I like to keep it at around 20% because I want to see a bigger list, right? And then I can weed out from there, right? You can do 30 if you just want to streamline it, but I like to keep it around 20. Keep these PE ratios around a 0 to 25. You can even stretch to about 30 as well. I like debt to equity being under one, right? When it's over one, a company might be over leveraged, right? So any news of recession or anything like that, those stocks can get hit really hard. So I don't like to be caught in stocks like that, right? So we most recently, or potentially even in war right now, right? So when you hear news like that, being in companies with higher debt to equity ratios is kind of scares you, right? So I don't want to be in a situation and think ahead of time. Analyst buy percentage, you want more people to be buying than selling, right? Upside about 10%. You can stretch this to be like, hey, it needs to be like 20% or so, right? So these are good things. And when I look at through stuff through this, I kind of be want to look at stocks that just the average person understands and knows, right? Which of course you kind of see some big names that have been part of the weekly watch list for us as well, right? JD being one of them, Adobe being another, TTD that was part of our watch list, PDD. You saw Intuit, of course, CRM. So you're seeing a lot of a theme, right? You're seeing some China stocks, you're seeing some software stocks being another part of it. So this is our 18 stocks here. From these here, I try to look for what I think is the best risk to reward. If I'm looking at something right here, for me, mine would probably be more towards Adobe because like I said, if I do a deeper dive into an Adobe, it's not trading at those 20, 30 PEs. It's trading at a 10 to 15 PE here. It's not a concern for debt. It's highly free cash flow positive, undervaluation by over 40% right here as well. Hedge funds involvement as well, 500 million. Philip Font, they're all down pretty significantly. So if I can be in these areas buying with them, probably what I like to see, right? Hasn't performed well, but past performance doesn't mean future performance, right? You still have a company that's growing at 12%, so they actually accelerated their growth, but still trading at a really low valuation. So that's how I kind of go through and scan through some ideas to pick up for stocks, right? So hopefully that answers that question for some of you guys. And a paper trade Google at 350, I'll put a limit, taking profit at 370. The stock is 380 now. Why is screen still not filled? That I don't know. I would ask me later about this. We can take a look at what you're doing. But it fills its general purpose for you, right? You did it. You took one at 370. You had to sell at that price where you wanted to go. So it fulfilled its purpose if you're paper trading. All right. Any other questions? Some good stocks to pretty much look at from the past too, actually. INTC, there's not much to say for this one. Pretty much government took over control of it and has been on a tear, right? Same thing. If it's all-time highs, I try not to touch it, right? The goal sun, but lots of positive momentum around AI and offerings, a lot of promises, exactly. Do you have a list of people that you follow that you could share with us? There should be a list that out there. I think Erica might have it. She can post that for you as well. But it's usually the common culprits. So it's like I'm going on hedge funds. Let's look at like an Amazon. Solid companies like this, you'll probably see all the same super investors that I follow get into them. Bill Ackman being one of them, David Tepper being another one, George Soros. It's not part of the list, but I do follow Daniel Loeb of Third Point. He's really good too. Philip Lafont, Stanley Druckenmiller, like I pretty much said. Chris Davies. He's like a he's like a Warren Buffett underling, trained under Warren Buffett. Ken Fisher, John Overdeck, Ray Dalio, right? So that's a good sort of list right there of super investors. Stephen Cohen, Ken Griffin, Paul Tudor Jones, Jim Simons, Israel Englander. right? So you'll see these people, me, every time I see them, I do mention them when I'm analyzing these people. Yeah. So a lot of the philosophies and all that kind of stuff, a lot of people who are really successful, we follow the same criteria in terms of value investing. Like when I'm telling you guys, looking at these
So,
valuations in that 10 to 30 range, intrinsic value, they're all doing that same thing. So by looking at what they're doing too, it just supports the fact that, hey, this is a strong buy for me. I can rest assured that they are thinking the same thing as me, right? So I tally up everything basically, and I want to basically see everything marked off for me that they're doing all the right things, right? Buyback programs, like shares count that is decreasing, revenue to be growing. If I'm looking at the revenue, I'm looking at the valuation. I want it to be typically under that 5-year median, right? The intrinsic value is a huge thing that a lot of people will look at, right? So intrinsic values, there's a lot of different models. A lot of people will calculate their own separate ones. So that's why having a large margin of safety, having 30% is important for me because, like I said, what if the calculations with from MarketDash is too aggressive or they think it's too optimistic, right? What if war or something breaks out, right? Because you bought at such a large safety net, you'll usually still end up profitable in your position, right? Versus when you buy something that's undervalued and then it falls, you just become very unsure of yourself, right? Especially most recently, the past 2, 3 months, right? If you're buying an overvalued stock and it drops, it'll scare you out and you'll potentially sell for a loss when you never needed to, right? Those are the things that come into play. I'll look at this last one, NOC. Good, reasonable here. Nuclear deterrent, holding near monopoly on the B12 and Sentinel ICBM programs, 95 billion backlog, promising recovery. Sounds actually really good, actually. Intrinsic value is not quite there. It's not crazily overvalued. Average Wall Street, that's over 20%. Let's see here. Seeing a lot of red, but not huge reds. Let's see here. Jim Simon started a position here. Ken Fisher, 97 million, just a small decrease, not really anything. 100 million, 30% decrease. John Overdeck did exit his position here. Ray Dalio started a position, small position. Paul Tudor Jones, small position. No insider buys, some pretty big selling, 1 million, 14 mil. Interesting. 42 4% growth at around 17, higher than median. That's where it's not pretty, right? So valuation, it's kind of sits above where it typically trades at when it trades at 15. So it dropping to a PE of 15 from 18 is still leaves a lot of room to the downside. So that is the risk for the stock here. I do like the fact that it has a huge backlog and it basically has a huge moat as well, right? So it did look like it had a huge fall. Technicals are very oversold as well. I think this is a trade setup. Yeah, very oversold, got heavily oversold. How's the weekly? Under the 50, a lot of bearish momentum. Can drop to this 50 simple moving average. It's kind of just in, if you're looking at it, I just go areas of demand here. So what I'm doing is I'm just going to the left. I'm trying to find big movements to the upside. If I'm looking at this one, I'm looking at this movement upwards as my area of demand. And I just want to just check my work here. That's one. I think the more likelihood one is this prior high here. So if I'm looking at support, let me just get rid of this one for you guys. I'm trying to find that flip, right? It hit this area, it fell. Hit this area, it fell. It's a very big point here. Hit this area, jumped up. If this stock can get, it's not even that far away from it, about a 3% move away from these areas. So a buy in these areas for a trade up might not be bad. But a likely spot for it to retrace to is this prior high, if you can see here. That's the magnet area. So here and then here. All right. So good trading setup. I don't like the fact the valuation, like I said, is on higher than what it typically trades at. So it's like I said, don't try to hold like long. Just try to make a lot of in terms of percent gain from it. If you're looking for 3, 5%, that might be a good trade. Isn't that a bullish flag? No. It's just hovering around this area here. If you're thinking about a bullish flag, you see something like the stock went up right here and then it retraced to like right here. That's your flag and it moves up, right? A move here, retrace, flags goes up. Here it's just hovering here. There's no flag set up there. Yeah. What price would you enter Envo? Envo, a lot of it, the price action was you take advantage of it when it's in here, right? It was already made about a 20% move up. Earnings are coming up. Did have a lot of recent strong news, but yeah, earnings is just always a toss up. I think it's literally a couple next week somewhere, right? So you saw it pretty much take advantage of it on a week by week basis, but now earnings is coming up May 6th, right? May 6th. So huge week next week for PayPal, for Envo. So I'd steer clear away during earnings event, especially if you're new. But yeah. All right.